Are you that one family member who wants to break this poverty chain in your family and become really good with money? If yes, I assume that your parents haven't taught you how to invest, but that's the one word that comes up as frequent as possible whenever you start going into the financial literacy. And I know that all the advices we hear on internet, investing into cryptos, in stocks, ETFs, index funds, bonds, real estate, NFCs, and diamonds, golds, watches, or even Birkin bag seems to be frustrating a little because you don't know where to start, and especially if you are starting in your 20s, in your 30s, or in your 40s, you literally don't know where to look at, and that's why all those advices making the topic even more unreachable for you, for your beginner level. So that's why in this video I want to share with you the journey that helped me to go from scratch into investment and start building my financial independence in Germany. And I'm gonna answer to three main questions. What is the major point when you can understand that you are now ready to go, ready to start your investment from zero? Then the second question is how to understand what to invest to, and the third question is how to start investing as the beginner-friendly approach. For all those three questions, I'm going to share with you some thoughts around and give you practical advices, and you can follow me through. And also at the end of this video, I'm going to share with you how much money I made using the same approach for my investment for the time being over 5 years already. If you are ready, let's go and let's understand straight away why investment becomes a hot topic whenever we talk about the financial literacy. If you are already a grown adult, you have heard the word inflation multiple times, and you know that every single year it's increasing, and actually it's devaluing all the value of money we have at this point of time. It means that every single year, if we have some savings or we have some capability of purchasing some products in exchange to the money we have, every single year as inflation is increasing, the value of money is decreasing. 5 years ago, for example, you could buy your new iPhone for 600 euro, for example, and then after 5 years it became the price of 1,200 euro, for example. I'm not pretty sure about the numbers, but just giving you a rough understanding what does inflation mean and how it's actually impacting our daily life. And investments give you possibility to buy something right now that eventually at some point in future would cost more, that would combat this inflation. And the one thing that I keep repeating a few times already in my blog, that there was one really nice advice that I found on internet. Rich people getting richer because they own assets, and inflation actually making the value of the asset even more valuable. Instead, poor people save money if they have this option, because not everyone has an option to save money. And by doing this, they actually become poorer because inflation eating out the value of this savings, and they becoming even more poor in comparison to the previous years, for example. So that's why my main message is you need to understand when exactly you can already start investing, because definitely that's the way how you can convert your money into something valuable right now in order to build the financial literacy, financial freedom for you in the future, when this asset would become more valuable in the future, and you would have the good exchange of money versus value in the future when you would need your money back. And I know that you would hear multiple times that the best time to start investing, it was yesterday, and all you need to do is just start as soon as possible. But I want to be realistic here, and I really want to put you into the same position where I was thinking and starting my investment, because I think it's valuable to understand when you are ready for an investment. I have shared already my story how I reached my first 100k milestone in savings and investment, and I actually pointed out that I started my investment when I had approximately 20 or over 20,000 euro on my savings account, because at that point I could already risk some money without having a fear of losing everything and becoming zero on my emergency fund. So that's why if you are right now in your 20s, in your 30s, in your 40s, and you don't have an emergency fund, it's not the right time for you to think about your investment and risking all the money you have on crypto, on stocks, or any other assets that you would prefer to use as an investments for yourself. I would definitely recommend you first to hyper focus on your emergency fund and getting better with the money management system. I have the video about how to build your emergency fund, how to calculate how much money you need for that in the separate video, and I also teach you how to manage your personal budget on monthly basis in the separate video as well. So if you haven't seen those videos, please watch them, because they definitely would be very helpful if you are just a beginner in the money management system for your personal needs. But once you are ready with your emergency fund, when you closed all the debts that you might have left for you or your family members, and if you don't have any financial responsibilities right now, and you really have some money that you are willing to lose, because you never know, investment, it's always a risk, and you should be a risk taker who are okay about losing those money. So that's why my main message here is you need to be prepared for losing some money. So that's why do not risk all of the money that you have. Better prepare yourself financially, make sure you have everything needed, and only then park aside some money and then start investing them into different assets. And that's exactly the question number 2 that I'm going to answer in this video: how to understand what to invest into. And that's the good question, because as I mentioned, there are multiple options: real estate, stocks, bonds, index funds, NFTs, cryptos, watches, or right now it's even trendy to keep Birkin bags as your investments. But if you are just a beginner, it's really frustrating to understand what should be the asset you start with, and there is multiple approaches that you can follow. Let me just share mine, that actually is quoting the Warren Buffett's suggestion, that it's very hard for us, for beginners in investments who don't know much about how the details of the market, how it works, how it's functioning, how to predict some patterns. It's better to always choose ETFs. It's the index fund, and if you imagine the whole stock that you purchase, ETF, as the one bunch of different, actually 500 different companies split it in the correspondence to their index. For example, some of the company may be 1% of the stock in this whole bunch of 500 companies. Some could be less, some could be more. And why it's the good approach for the beginners, because usually these 500 different companies have the low risk to crash at the same time, because they are with the different background stories, and that's why if one is fluctuating down, another might be fluctuating up, and that's why it stably keeps you in good balance. And for the long-term commitment, it's giving you lower potential increase in your investment, but gives you the stability that every beginner is actually seeking for, because when you are building your financial independence, especially if you are an expat in foreign country, it's very important for you to protect yourself financially as much as you can, and actually starting soft and smooth going into the investment gives you more courage, gives you more security space, safe space where you can explore the area. But of course you can also try to invest into some specific company. The point here is that you cannot go to Amazon or I don't know, Zalando or Apple website and just go there and buy the stock from their website. You need to find the middleman, so to say, like your trader. Every year there are some new apps available for you to do your investment, so that's why I just would give you a basic advice. Do the small research and find out the best options available for you in your country, and also pay attention on the transaction fees, because what we want to do as the beginners in investment is to minimize the entrance level in order to just kick it off and make it easy for you to do your first step towards investment. And the third point, how to start actually investing with the beginners friendly approach. And I would share with you the dollar cost averaging. That's the principles that actually is recommended for everyone who is just starting. And I, to be honest, have risked, I didn't know about the strategy at the beginning when I was just starting the investment, but later on I figured out that through the natural way I understood that this principle of putting some specific amount of money every single month into my investment portfolio was way to disconnect my emotions out of this experience and let the time work for me by doing its work. Basically, every single month I invest 100 euro to my investment portfolio, and if I want to purchase ETFs, it costs around 400 to 500 euro right now, the one that I purchase. So it means that few months I need to collect those 100 euro, and once I reach that amount of money on my trading app, then I easily go and set up an order to purchase one ETFs. I usually pay 2 euro for the transaction, and I basically don't calculate how much was the difference between the weeks or months ahead, what would be my prediction for the next following future. No, the idea of the dollar cost averaging is actually that the time helps you to smooth all these deviations in the growing line, and by the end of the long-term commitment, for example, after 5 years, you anyway would see some trajectory that would just smooth all this fluctuation on the way. This approach actually allows you to start from zero knowledge about investment and just doing your very first purchases multiple times, and then start digging into the topic on investment and becoming more and investigating it more from the personal already point of view, rather than just doing your research endlessly and still hesitating to do your first practical step towards building your investment portfolio as the beginner. And one more thing that I want to add here, that actually it's very important to see if the stocks or ETFs that you are purchasing are giving you the dividends, because if you would build some portfolio with specific ETF, for example, you would start seeing the dividends that are coming as the spread additional money across all the shareholders globally, and it could be very little, but eventually when you start building more and more on your investment portfolio, you would see more significant numbers arriving to your banking account every quarter or every half a year or every year as the dividends to the investment you have already. But please don't forget that this income is associated, is called the capital gain. So that's why whenever you have some profit out of your investment, you always need to double check how much taxes you need to pay. Taxes about the capital gain in Germany I have explained in the separate video, so make sure you watch that and you become more aware how it's actually investment works in Germany, because it's very handy when you need to file your tax report at the end of the year and actually bring up all the data transparently to your tax office in order to balance your taxes and your income. And as I promised at the beginning of this video, let me share how much money I actually won over 5 years already. Investment was the dollar cost averaging. That's my long-term strategy, because for my mid-term investments, I still exploring the area of real estate investment. And as I promised, I would share that once it would be more to share about. But for the long-term commitment, I invest every single month for 5 years, 100 euro, sometimes less, sometimes more, because sometimes I'm getting some extra bonuses and I actually transfer this money to my investment portfolio. And with that said, I actually can share with you that over this 5 years timestamp, I have already invested over 8,000 euro. 2,000 euro of that is actually my in interest. If you want to know more about what exactly sits in my investment portfolio, I would recommend you to watch this video where I transparently shared all the positions that I have in my investment portfolio and shared the small story behind every purchase of every stock that I own as an asset in my investment portfolio. And with that said, I wish you great luck with starting your investment and building your first steps towards your financial literacy. And let's see each other in my other videos that are already available on my channel. Take care and see you. Bye bye.